I'm John Hanna for CBTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us at Edmond, Oklahoma. Good afternoon, Greg.
Good afternoon, John.
How you doing today?
Well, we're doing fairly well.
Awesome. Now, tell us about the market. I mean, we've had like a bad couple of days with the market. What's happening with the market now?
Two words, John. June gloom.
Okay.
We've had disappointing economic data. It's melted the domestic equities for the fifth straight week. Even the holiday shortened week's decline, it left the S&P at a level that we haven't seen since late March. And we're back at the bottom of the recent 1300 to 1340 range on the S&P 500. And we have 10-year treasuries hitting its lowest yield since December. So the markets are kind of hitting that resistance level, along with the disappointing economic data. Year to date, the Dow Jones is up about 4.9%, Nasdaq up about 3%, and the S&P just a little above that, about 3.3%. As of Eastern time today, around noon, on the 6th of June, the markets are off roughly. Pardon me, let me grab my notes here. But the markets are off a little bit as we go into the Monday. Markets on the S&P 500 is we're off about 5.8 points right now. So trending just below the 1300 level on the S&P 500. So what we can expect probably is, unless we get some really good news, is probably some continued weakness for the foreseeable short-term future. Some of the headlines last week, John, were really worth, not so thrilling news. When you talk about home prices, in the 20 cities tracked by the Standard & Poor's Case-Shiller Index, it fell back to the low of April 2009. So this is confirming a double-dip downturn in the home prices. And the unemployment rate rose slightly to 9.1 in May, according to the Bureau of Labor Statistics. Had a gain of 54,000 new jobs, which was much lower than the 220,000 average increases during each of the previous 3 months. And though April was the 22nd straight month of growth for U.S. manufacturers, the pace was much slower. The Institute for Supply Management said its index of manufacturing activity went from 60.4% in April to 53.5% in May, just above the 50% mark that represents expansion. Construction spending also was up about 0.4% in April, the Commerce Department said, though it's still 9.3% lower than it was April 2010, excuse me. So a drop in public spending was largely offset by an increase in private spending, but the 1.4% gain initially reported for March was revised downward to 0.1%. So, weakness across the board pretty much when it comes to economic activity, and the market has adjusted for that. We also have Moody's once again downgraded Greece's sovereign debt and lowering its rating from B1 to Caa1, which is poor quality with a possibility of default with a negative outlook. And so this basically puts the odds of a default sometime in the next 5 years at a 50-50. If we look ahead, I think the European markets will accept a report that a second bailout needed for Greece could be larger than previously thought. So investors are going to be trying to determine whether equities' recent difficulties might be the start of a summer downturn. Some other key dates and releases this week, John, are consumer credit on the 7th, the Federal Reserve Beige Book report will be on the 8th, international trade on the 9th, and export prices and Treasury budget will be on the 10th. So as we officially head into the summer months, the sell in May and go away is maybe finally hitting the markets, and good time to just to tighten up those sell stops. And if you're going to be heading out of town for the vacation, but also I encourage you to be building a watch list over the next few weeks as things may be softening up to have money ready to be put to work when we see opportunities.
That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CBTV.net in New York.